The Institute of Internal Auditors presents All Things Internal Audit. Join David Petrisky, Director of Professional Standards at the IIA, as he dives into the hot topic of greenwashing with Edith Wong, Managing Director at FTI Consulting, and Brian Wilmot, attorney at Paul Hastings. In this episode, they unpack the challenges of navigating environmental claims, share eye-opening cases, and offer practical tips for auditors tackling greenwashing and other ESG-related risks.
Today we're talking about greenwashing, and that's a pretty specific term that many people may not be familiar with. Can you tell me a little bit about, what do you mean when we talk about greenwashing?
Sure. So greenwashing is a specific term, but it would be a term that we will also say doesn't really have a universally accepted legal definition yet. So for things like fraud and corruption, you have a definition. You can say exactly what those are. But for now, greenwashing is more of an umbrella term that just generally refers to the practice of where companies are perhaps, making certain environmental claims, but don't have the data to necessarily substantiate those. Some of those claims may be more aspirational in nature, but in real life, in practice, they're actually just kind of going on with business as usual and haven't really changed their approach and their practices to actually substantiate those claims.
And are you seeing those types of cases come up where people are bringing actions against companies for their environmental claims?
Yeah, this has been a pretty active area, and it's likely to get, I think, more active as well. A lot of the earlier litigation activity, regulatory activity, I think, is focused more around kind of the more advertising, marketing space and what people are saying. But now there's a lot more activity and a lot more the greater obligations that are being imposed on companies regarding disclosure and reporting. So what I would expect you start to see more about, what people are saying to investors, what they're saying in their securities filings, whether they're, holistically reporting about what their operations are and how they're addressing sustainability issues.
Yeah, and are there any significant examples of that you can point to say, well, here's one well-known case that was brought, or one well-known incident of greenwashing?
Sure. So there was one that we were talking about earlier in our panel where it's not necessarily greenwashing. I mean, it's kind of falls within fraud generally, but it does involve environmental claims. But it involved a company who was working in the automobile industry, and they were apparently providing false data and misrepresenting their carbon emissions within their vehicles. And so, this was discovered, and it resulted in a very large fine for the company. But since then, the company has, identified what went wrong, and it's also done a great job in terms of now, being able to implement their compliance programs and set up so that they're actually now making sure they're identifying these risks, and have become a really, a good example of how to kind of turn it around and make sure that their claims really are verifiable and have been fully vetted.
Yeah, and it's pretty well-known example. I think I know what you're talking about there. Are there any other types of possible actions or statements that companies make that could lead them to some exposure for greenwashing?
I think a big category that we've seen a lot of activity around is where companies are making kind of vague statements about what they're doing to address sustainability concerns. You might see that in a circumstance where they may be a big emitter of greenhouse gases, and they want to be seen to be doing something to address that. And then questions become, whether whatever they say they're doing, whether it's investing in renewable energy or trying to reduce some of the climate impact of the products that they manufacture, that sometimes it's seen as, oh, you're trying to hide or distract from the other part of your business where a lot of those emissions are kind of on an ongoing basis. So I think that's one area you see a lot of focus on, is those types of situations.
I think what's also interesting about greenwashing is you can kind of see a range. So for example, there could be a company that can make a certain claim about how much of their product is made with recyclable or recycled materials. That's something that you can very much test, because you can say, all right, X percentage of this product product is made out of recycled materials. You can test it's either correct or it's either incorrect. But there are going to be other claims where you can say, we are environmentally friendly, we are green, we are natural. So those ones are a little bit more, ambiguous and vague in nature, and those ones are harder to test, but at the same time would be subject to the same level of scrutiny, because if you are misleading consumers towards making choices to purchase or use services by your company based on these environmentally friendly kinds of statements, but in reality you're not really doing much to substantiate these, that is a concern and opens you up for all types of risks and negative impact to your company.
And I think this is like really an evolving space that everybody from companies out there who are trying to figure out what they can and can't say, but also the regulators themselves and litigants, the public at large, are still trying to figure out what is reasonable, what is an appropriate representation to make about what you're doing to address your sustainability and environmental impacts you're having. So I think it's really something that we'll see continue to evolve. So what we see today, that this may change. We may start to see more specific representations as the data gets better to support it. And then there may be more challenges there, and it may focus on, well, how can you base that on this piece of data or that piece of data? And you'll start to see companies more questioned on all of their diligence that they're doing to reach their conclusions and their representations they're making.
Yeah, that's where I was going to go with my next question: is how much of this is related to the non-financial reporting that the companies are doing and the requirements around that versus like other corporate communications or marketing statements?
It's really both. I think you have. I think you could describe a number of buckets. You have kind of the marketing aspects, whether it's your labeling of your products, it could be your representations and advertising that you're making about your products or services. It could be reports you're publishing on your website about what you're doing, promotional materials, et cetera. I think that there's that category. Then there's disclosures, and some of those are increasingly being mandated by regulators. We're saying you need to disclose what you're doing to address climate emissions. And what are your climate emissions? And if you're offsetting, what are your projects that you have going on related to climate emissions? And that's a different set of types of considerations there that raise more specific regulatory concerns separate from the marketing piece, which fits into a little bit more traditional framework because you have to be accurate about what your products are, whether they're safe, et cetera, what they can do and can't do.
Are you starting to see more requests from companies about vetting their reported non-financial information or trying to be in conformance with various standards or frameworks around environmental reporting?
Yeah, I think companies are definitely realizing that there is now this much higher standard to their regulatory requirements for reporting, their claims and how supportable it is. They're realizing that there is scrutiny coming in from various stakeholders. It's not just necessarily the regulatory agencies, but you have stakeholders ranging from the consumers, from investors, from NGOs. It's just really coming from all different places because there's just this increasing attention to how a company is necessarily approaching its environmental impact through its operations and its company.
Yeah, I think there's a lot of compliance areas that are more mature. And so everybody has, at least a more comfortable view of what they need to do to meet expectations. If you have this type of issue, what do I need to report about it? Well, how do I need to respond? I think here, everybody is still kind of figuring it out. So a lot of companies are looking for some guidance on how do I navigate this environment, particularly when there's both kind of those parties who want to increase the amount of reporting and increase focus on sustainability considerations. And then there's also those who think we're going too far and are kind of pushing back on that trend. So, sometimes for some companies, it can be a tough balance to manage.
Are there any significant global authoritative bodies that are, or I'll just say, in practice have some leading frameworks kind of risen to the top and that get noted or mentioned most frequently?
So we're seeing it from all different places, from all different countries around the world. There's certain educational frameworks. So TerraChoice is an organization that had developed what's called the 7 Sins of Greenwashing that provides consumers with an understanding of potential and common deceptive practices that can be engaged by companies. Here in the United States, the Federal Trading Commission has developed what's called the Green Guides. That was developed really in the 1920s, so it's been around for a long time, but obviously has been updated over time, given just advances in technology and the types of products that we're seeing, materials and things like that. So I don't know, Brian, if you would disagree that that's like a leading framework?
I don't think there's necessarily a leading framework. There are some standards organizations that, I think we're seeing some adoption of sustainability considerations like the IFRS standards. I think you're seeing various jurisdictions starting to adopt, principles based on, that framework. I think even the U.S., regulators are looking at, how they can integrate some of those principles into, for U.S. public companies, et cetera.
There's also developing reporting frameworks too. So there's like the GRI, the Global Reporting Initiative. There's also SASB, which is the Sustainability Accounting Standards Board. They actually have come together recently to try to provide a more kind of united framework for reporting. So there is a lot out there in terms of the different frameworks that are available for companies to consider. It also depends really on their industry and jurisdiction to see what's the most relevant and what might be most material for your particular organization. So it's a lot of different areas to consider.
And in your discussions with the chief audit executives, have they talked to you at all about how they're incorporating these risks into their audit planning or into their model of the organization's risks?
I think it's still in the beginning stages. I think this is probably more on the radar of people in CSR organizations, maybe in the compliance organization. I don't think it has fully penetrated into a lot of the other functions that support, like internal audit, that support analysis of the various risk areas you have as a company. I think it's increasingly getting there. I think they're aware that they need to start doing that, particularly as the regulatory environment gets more complex and more formalized. So there's going to be formal obligations for you to actually check out some of these things. I think it's becoming a more serious interest.
That's an interesting point. Do you think companies are more protected if they have had an internal audit evaluate, or an internal audit function evaluate their statements around their environmental objectives or accomplishments?
I think from a compliance perspective, it's always better when you are actively testing and monitoring your company activities, your compliance activities, your business transactions, regardless of what risk area they are, sustainability or otherwise. So I think, if you can say internal audit was in and testing this, I think that's always better than having said, no, we just never looked at it.
I agree. I think it's highly beneficial. Internal auditors are just uniquely positioned within the organization to be looking at this type of risk, given their function. So they are objective. They have the independence from operations management. They are focused on risk and compliance. They're used to working with different segments of the organization from different functions. They're used to looking at data. So it's just the perfect role for them.
And kind of along those lines, what are some of the practices that companies are implementing to try to prevent greenwashing, or to try to make sure that their statements are aligned with their operations and their results and all of that?
I think there's a range of things. I guess a few things I would highlight is starting to think about how you due diligence, if you're particularly in the carbon offset credit world, the various projects that are supporting those credits and offsets. So what are you looking at, either the validating organizations, or if you're directly investing in projects, assessing those and making sure that those impacts are real. I think that's one area that people are starting to think more seriously, which is a familiar process to most organizations, because due diligence in a range of contexts is a very important step in that process, and really having that scrutiny up front to help you, provide some support later on when somebody questions it. You have a little bit more of a defense there then.
Another, I think, important component is having clear governance structure, having that kind of tone from the top to say that this is really important to make sure that our environmental claims are well substantiated, and that it's gone through all of the proper vetting procedures and that these are credible, real statements that we stand behind. That's really important because it's going to, permeate throughout the organization so that employees know that when they're making a statement, especially when it's coming from a marketing department who's, are well-intentioned, they think we're doing good, they want to increase sales, they want to perhaps, shed the company in a more positive light, they can be vulnerable to making statements that are potentially overstated or exaggerated. So having that clear governance structure to say, all right, we are committed to having, environmental claims that are fully substantiated. We want, these to be fully vetted. We need to provide training to our employees to make sure that they're careful when they're making these statements. It's really important.
And I think what that governance structure relates to, which I agree 100% is one of the most important pieces, but it also facilitates kind of the assessment of what your organization's risk profile really is. Because I think a lot of organizations could feel, oh, we need to rush to address this immediately. This is our priority. And then you jump to another priority. And it's, first you kind of have to stand back and say, well, wait, is it relevant to us? And where is it relevant to us? If a company that makes a very highly complex product with lots of raw materials inputs probably has a much bigger task ahead of them than a purely services organization that might have much less exposure. So
you're already jumping into my next question, which is, yeah. All right. So are there any specific industries or sectors where you see this being a more prevalent problem or a more common concern?
I think just from a general public concern, I think anything in the higher carbon emitting industries is really going to be those that are getting a lot of focus from regulators and a lot of focus from the public. In your oil and gas industries, extractive industries, mining, in transportation industry as well. You've already seen a lot of that with those kind of companies in terms of scrutinizing their existing sustainability statements and the projects that they're advocating for. But I would say I think there will probably be an emerging, interest in other areas too that maybe don't seem as ripe for it, but still have like really large energy footprints, for instance, certain tech sectors and things like that. I think there could be greater scrutiny there because they have, a very significant impact that might not be readily apparent to it.
Starting to read about the power usage of artificial intelligence. Yeah.
Yeah.
Exactly. That's, I think that is going to be a further discussion topic as we go forward.
Or any, final words of advice for internal auditors? They may not have, audited in this area before. So what tips or suggestions would you give, having worked in litigation and seen what kinds of concerns get raised and what things are effective at at counteracting those challenges?
Sure. So, as we've been saying, it's definitely an evolving area, but there are definite significant potential risks, whether it's financial risk, legal risk, operational risk, that's going to be, prevalent as a result of potential greenwashing actions. So I think just, for auditors just to start thinking about it, we're still in the early stages. So educating yourself, being vigilant about being aware of what are the regulations that are relevant to your particular company, to your industry, to your jurisdiction. Just staying aware of all of that, I think, is a really good move for many of the companies out there.
Yeah, I think all I'd add is, I think internal auditors play a critical role in any organization in kind of being a core line of defense in identifying issues early for organizations, but also being a source of expertise across various areas. So they cross over the risk, the understanding of financial data and information, and legal aspects, sometimes through regulatory aspects as well, where they can help legal communicate with other parts of the organization, but also be aware of the risk that is emerging from there. So I think they will play increasingly a very important role here.
All right. Thank you both, Edith, Brian. It's been wonderful talking to you.
Thank you for having us.
Thank you.
If you like this podcast, please subscribe and rate us. You can subscribe wherever you get your podcasts. You can also catch other episodes on YouTube or at the IIA.org. That's THEIIA.org.